All right. So good afternoon, everyone. I welcome you all to today's webinar. As you know, the topic for today is navigating regulatory frameworks for facilitating cross-border payments. And today's webinar is brought to us by Prembly and Africa Tech Radio. Thank you so much for putting this together. And we're looking forward to an insightful, engaging session. Our panelists are people who have awesome background, and the conversation is definitely going to be rich. All right, so I will go on to introduce the speakers, but before then, I just want to give the audience an overview of what today's session is going to be about, right? So we're going to talk about the regulatory frameworks for facilitating cross-border payments, first of all, and then we'll go into the significance of this conversation for a time as this, with the economic situation in Africa and different trends that's going on right now. So we're going to also talk about that. Then we're going to move on to the challenges that companies or panelists have experienced in facilitating cross-border payments, and also talk about solutions that they've been able to implement, to these challenges that they faced. And we'll also look into relevant cases from the experience, and even just practical cases that even audience might have encountered as well. Then much later, we'll have a question and answer session, which will take about 20 minutes, where we take questions from the audience and our panelists would answer them. So I'd encourage you to right about now, if you already have questions, like I said earlier, please drop them in the question and answer box. And as the session goes on, if anything prods your thoughts, or you have something you need panelists to speak to directly, please also drop that in the question and answer box, and we'll be sure to get to your questions. All right, so I'll go on to introduce the guests. I'm very excited to have the diverse panelists we have on board today. I'm looking forward to the conversation as well and learning a few things from them. I'll start with Kenneth Kanyarati. Kenneth is the Legal and Compliance Director for Absa Bank Kenya, and he doubles as the Vice Chairman for the Compliance Society of Kenya. Prior to Ken's role right now, he worked with Standard Bank, where he held several senior roles in the organization. He was the head of compliance, he was head of money laundering control as well. Kenneth is also a certified compliance professional by the International Academy of Business and Financial Management and the Chartered Institute of Security and Investment. So Ken, we're happy to have you on board. I see that Ken will be speaking to money laundering controls, KYCs, and financial crimes, and also touch on his experience from Kenya. So it's awesome to have you, Ken.
Thank you. Glad to be here.
All right, so I'll move on to Lavina Ramkissoon Rao. Lavina is popularly called the AI mom. She's great at all things AI. She's a futurist leader and a conscious technology creator who stands for the unification of the Africa tech space. She has expertise in psychology, technology, and economics, and the application in AI, blockchain, emerging tech, ethics, and data. She's also a catalyst who serves as chairperson, director, board member, and founder across multiple industries, sectors, and technologies. And she aims to unlock the potential of the African arena. Right now, she's currently serving as the advisor to the African Union, and she's a technology and data expert with the United Nations University Center for Policy Research. Great to have you, Lavina.
Thanks so much. Looking forward to it.
Yes. And Lavina would, touch on digital currency, cryptocurrency, AI, all of those type of things. And yes, I'm sure we'll have a fantastic learning experience. Okay, so Bankole Falade is Flutterwave's Chief Regulatory Affairs and Government Relations Officer with about 20 years of experience in law, regulatory affairs, government relations, and business development, financial and telecoms industry. Now, before joining Flutterwave, Bankole was a director, regulatory affairs and government relations officer at IHS Towers. He has also held key leadership roles at Visa and MTN, managing interactions with key government stakeholders and regulators in key markets across Africa. He supports Flutterwave's vision by providing strategic oversight and government relations strategies. Great to have you on board, Bankole.
Thank you, everyone. Great to be here. Good afternoon, everybody.
Good afternoon. I see that Bankole would guide us on, regulations, remittances, money transfer licenses, digital payments. And yes, I know that that would be a fantastic session as well. All right, Elizabeth Rossiello is the CEO and founder of Absa Finance. Absa Finance is a global fintech company accelerating economic growth in Africa through best-in-class foreign exchange payments, settlements, and treasury services. Now, Absa Finance has been operating for about 10 years now, and I hear that in their first year, they had an interesting experience with a big regulator. So I'm looking forward to the session or Elizabeth's talk on how she's been able to navigate the regulatory challenges she has faced and how she's been able to also build lasting infrastructure, maintain a global footprint, and basically their regulatory approach across the different marketplaces they operate within Africa. So it's awesome to have you on board, Elizabeth. Thank you for joining us. Okay.
Thanks for having me so much.
Awesome, awesome. Martin Kwame Awaga is a digital economy and financial technology consultant with over 12 years of dedicated experience focusing on a broad spectrum of areas, including economic research, governance, public policy, international development, financial analysis, youth development, and project management. Martin's career has been marked by significant contributions to various consultancy projects and programs across the Caribbean and Ghana. He serves with the public and the private sector and has diverse exposure, which has endowed him with a rich understanding and expertise across this region. So I see that Martin will be speaking to us on digital financial transformation, international trade, and so on. It's great to have you on board, Martin. Thank you for joining us. So why are we having this conversation? I think that's a good start to this event. Why exactly did we come up with this conversation? I know that when Prembly and Africa Tech Radio wanted to start this event, they sort of put a survey out to know the pulse of people, to sort of check what will be impactful for people at this time. And it turns out that this topic is a topic that cuts across everyone and every industry. From an individual perspective, if you're trying to send money, remit money to your family members, you want to travel, you're going for school, you want to shop online, it affects you. If you're a business, you want to expand, you're trying to sort out your payroll, just so many things. It affects businesses as well for expansion beyond the current country they operate in. And even if you operate, on a global scale, you want to be able to sort out your supply chain issues. So this is a topic that touches everyone. And it's more like flying an airplane. You know that you want to fly this airplane, but you need to know the path, right? You need to know the people that are involved. You need to know who's paying for your fuel. So the regulations are, those nuances around how do we fly the plane successfully to our destination? How do we ensure that the money gets to where we want to get to? How do we even move money within Africa? Is it possible? What makes it possible? What are the challenges to moving money within Africa? What are the costs implications? And what are the solutions we're looking to bring in on board? How do we compare, on a global scale? So that's what we'll be delving into today. All right, so I'll start with Bankole. Bankole, could you just let us know what are the regulatory frameworks for cross-border payments in Nigeria? Let's even start with that. What are the regulatory frameworks for cross-border payments?
So thank you again for having me, and thank you very much for the question as well. So pretty much, in Nigeria, cross-border payments are regulated by the Central Bank of Nigeria. The Central Bank of Nigeria uses what we call, it has an exchange control mechanism. The name for the particular mechanism is called a foreign exchange manual. So through this manual, it regulates, what type of services, goods or services are allowed to, get foreign exchange directly from the central bank or through any of its authorized dealers for the specific purposes in which you can make those remittances and foreign payments. And it also regulates, what we call like a prohibited list. There are also list of items that the central bank has by regulation as well, restricted the use or direct access from foreign exchange in Nigeria. Thank you.
Okay. Ken, do you want to give us an idea of the regulatory framework in Kenya? Thank you, Bankole.
Yes, and thanks for the question. So we've got a number of regulatory related requirements from a Kenya perspective. So if I start with the National Payments Act, which regulates the supervision of payment system and the various payment service providers. And if you link that closely to some of the Central Bank of Kenya prudential requirements that then make it provide a framework under which any entity that would be engaged in these kinds of payment systems would require to firstly get approvals from them. And obviously this has been, I would call it recent development. A lot of it has been recent development, certain aspects of it because of the evolution of the payment space. If you're looking especially at the financial fintechs and such kinds of alternative payment service providers to the traditional banks. So that becomes quite critical. Obviously, then, as I've indicated, we've got the prudential guidelines that will then look at the different areas, be it payment service providers or other types of payment enablers, including the financial institutions. In addition to that, we've got various other aspects of remittance that would be captured under various under. So, for instance, the Proceeds of Crime and Money Laundering Control Act would provide aspects of what it would require for funds to be able to move cross-border. So issues to do with supporting information, supporting documents, that then becomes very critical. We've got Prevention of Terrorism Act, which also has components that have to be adhered to in that regard. Additionally, we've got national payment regulations that provide authorization regarding the various institutions that are then involved in the movement of money through the various payment channels. And then we have certain specific regulations that touch on the payment of through the card industry and data security standards. So it's fragmented to address the various aspects of movement of funds cross-border. And obviously, this is informed by the evolution of the various alternatives that there are, since we previously only had the traditional banking sector type frameworks that are in place. So it's ever evolving. Where does it head to after this? Your guess is as good as mine. It will be determined by the evolution of the solutions that are made available through the various alternative channels.
Thank you, Ken. It's interesting you mentioned fragmentation of the regulations, because I know that that's something we're obviously going to get into as we progress in the conversation. I want to hear from Elizabeth, what is the framework like in South Africa?
I'm sorry, I think there's been a mistake, but we are, in 15 African countries, and we started in Kenya, and our largest market is Nigeria. I'm not sure why I've listed as South Africa on this. We have only limited operations in South Africa. We purchased a company there a few years ago. So I wouldn't say that it's our biggest market. I will say that the South African Reserve Bank is one of the loudest central banks on the continent. And what's interesting about the South African Reserve Bank is that they often publish guidance before they publish regulation. And this guidance really provides clarity for the market before full regulation comes out. And we actually love this approach. There are other markets and regions across the continent where there'll be silence for quite a long time, and you'll see entrants come into the market. You'll see operators, banks, and fintechs working in what we call the gray area. And years before a regulation comes, I think when we have even guidance, even if it's strict, it provides clarity that investors, that operators, that clients, customers all want, because it lets us understand how and where we can build. So I think the South African Reserve Bank has been great in that, and also Absa, the Payments Association, has been good in that. What we're seeing now in South Africa, which is one of the last markets on the continent that has extremely strict exchange controls with absolutely no workarounds, we're seeing now obviously a very strong digital currency sector. My first company was called BitPesa. We were the first exchange on the continent to trade digital currencies and the first to trade between African currencies and digital currencies. And just 2 years after, in 2015, the South African Reserve Bank published guidance on digital regulation. And now, almost a decade later, we see the issuance of licenses for 60 companies. So again, it shows how long regulation comes out. What we're seeing now in the payment space is we're seeing some fintechs use workarounds to do outbound transactions or to actually sell ZAR and offshore it. I think it's interesting to see whether the South African Reserve Bank will clamp down on that or let that keep continuing. It's not just fintechs anymore. It is actually commercial banks that are participating. So I think we see when the commercial banks enter that space, it's almost an indicator that that's the way the central bank will go. So it's a push and a pull, both the regulator displaying what they want from the industry and the industry also giving indicators to the central bank about what they need.
Awesome. Elizabeth, I think you've done an awesome job, starting off BitPesa way before South Africa caught on board. And before we move on to another speaker, I would like to ask about the key differences or similarities you've noticed in operating across different markets. What would you say those are?
I mean, it's impossible to summarize that. We operate in so many markets and every regulator is different. I think what's been interesting is that I started my career in Kenya where mobile money was so well regulated. And so well regulated. So much guidance on mobile money and so much activity. And when we entered Francophone West Africa a few years later in 2015, there was no regulation for mobile money wallets. And the largest non-bank provider in the region was Wari, which was a cash agent. And so I think we saw a complete absence of regulation. And I started my career after banking in Africa in microfinance, where I saw a lot of regulation come in that wasn't working for the market and a lot of push and pull. So I think we've seen, the entire rainbow of regulation on where it is. Of course, in Nigeria, we have an active regulator who just changed control. And I think what we see there is a lot of communication. I think the last quarter, Q1 2024, we had, I don't know what, guys, a dozen issuances and guidelines come out just in one quarter. So I think, it really varies on how communicative the regulator is with the industry.
Awesome. Thank you very much. It's great that you mentioned mobile money, and that's going to loop in Kwame. Kwame, I want to know, considering the impact of mobile money in Africa, how do you think mobile money is being regulated to facilitate cross-border payments? And what do you think that also implies for financial inclusion? I know you're very big on financial inclusion. What was your take on that?
Yeah, sorry. I'm experiencing some internet lag and fluctuation, so kindly take pardon with that. Yeah, so I mean, when you look at the entirety of the African continent, there's a whole lot of discussions on regulations and innovation and financial inclusion, as you rightfully mentioned. Now, let's bear in mind that there's a lot of similarities and as well as differences when it comes to the regulatory landscapes across the most prominent economies where you see a lot of these innovations, like Nigeria, South Africa, Kenya, Egypt, and what have you.
Okay. I think Martin, like you said, he has a connection issue. So I'm just going to quickly move on to Lavina. Lavina, what's your take on the regulatory framework for South Africa, if you will, or any other country you would like to speak on within Africa?
Yeah, thanks so much for that question. So I'd agree with Elizabeth in terms of, where we stand from a South African perspective. I think the regulator has been one that is super aware from a very early stage, but they don't necessarily enforce something, just because they need to. They kind of really take the time to understand the market before they have to go down that route. And, it has been sort of really good to see that I think it was about a year and a half ago or 2 years ago, there was, digital assets and, that becoming a thing and that being regulated by the FSCA. So that was a really good move, and then we've obviously seen some semi-applications that have spun off that. And then now we're seeing, 60 odd crypto companies that have been given licenses as well. So I think it's all sort of in the right direction. I think if you have to look at it from an Africa perspective, we have a very fragmented Africa approach still when it comes to, finances and understanding the flow of it. So that is definitely an area that we can, utilize as, an opportunity to find better solutions. And I think Africa is ripe in terms of solving this entirety with a lot of the new age tech that is there. I know that, for example, PAPS is around, which is an initiative from the African Union, and that is literally trying to address a lot of this cross-border payments. So they've put together, a few different, sandboxed environments to allow for that to happen. They've also allowed for, them to test between at least 8 or 9 different countries, and that's growing really nicely. So again, I think as much as it is fragmented, we almost still need a wider overarching plan for cross-border payments rather than, smaller sort of initiatives that's happening on individual levels, if that makes sense.
It does. We've already started talking about the challenges, which is great, and leads me to my next question before we leave, Lavina. So what would you say are the challenges, the firms you've consulted with your advisory role as well? What would you say are the challenges for cross-border payments regulations? And how have you, maybe in your advisory, addressed these challenges as well?
Yeah, amazing question. I think, we have challenges that cross both from a infrastructure perspective. We have that from whether it's limited access to, the internet, whether it is low speed of the internet, not enough data centers, whatever the case may be, that sort of attribute to a lot of this not being able to, come into fruition. Other areas are obviously high costs. That is a huge concern in terms of, data costs are very fragmented across Africa. So, some countries it's lower, so therefore you see a lot more activity when it comes to cross-border. In higher regions, not always the case. And then obviously there's, an area of transparency. So, we don't necessarily understand the full transparency that kind of exists across the entire value chain. And that adds quite an interesting complexity to it. And I think, ways for us to kind of tackle this has definitely been around finding the right kind of technology that can help to address this. Also finding the right types of skill sets that can help to, do that. So both local and, be able to find that local talent and nurture that and, spur up that ecosystem to then support that environment. And when it comes to infrastructure, we've kind of started seeing, both from a telco perspective as well as big tech that have come in and started putting a lot of that infrastructure in, so I think we're seeing movement all around. Now it's more just around the application side of it and putting a vehicle in place that can actually solve a lot of all of this. And I think that's where, having a strategic view and an, a future sight view in terms of what we need to build towards kind of makes sense.
Fantastic. You mentioned internet being slow or have been the issue or one of the challenges, right, in cross-border payments. And we experienced that, Martin's internet fluctuated for a bit. So I reckon that maybe we were to transfer some money, maybe that might be an issue as well. Martin, do you want to speak to that since, it addresses, yeah. Oh, Martin,
yeah, thank you. Well, thank you. Recently, I don't know if any of you have heard the news, but we've been experiencing some undersea cable cuts, and that has disrupted internet service provisioning. Not having this kind of challenges would basically affect transactions that we are talking about. So there should be other alternatives that we should be looking at. satellites the solution. It has its own merits and demerits. And so these issues keep coming up. And I think one of the things, like Lavina mentioned, is infrastructure. We cannot put the bull by the horse or in front of the horse. The cart before the horse. Sorry. We see a lot of times after has taken off very nicely, and we are coming to that discussion. But I just want to start that. And one of the main things that we are having issues with is infrastructure. Infrastructure is impeding the growth of digital financial transactions in Africa or cross-border transactions in Africa. No two ways about that. We haven't been able to, as a continent, I mean, we've mentioned this in a variety of talk shows, a variety of discussions, but we have not been able to come together as a continent to address this issue. One is the formulation of a wider plan, as she rightfully mentioned. How do we do that? Is it the formation of a new central bank for Africa? Is it a World Bank for Africa? Something like that, where we can be able to streamline all these regulations. Because when you look at it, there's a whole lot of difference. If you look at Ghana and Nigeria, I mean, the turf war between Ghana and Nigeria is very, very, very strong. Not just in Jollof, but in every other sphere of life. You you look at or when you take a look at the financial sector in this kind of or these two economies, they are very different. Whilst Ghana went towards a telco-led mobile money or digital wallet ecosystem, Nigeria went towards a bank-led approach. So you see that how do we connect this dots? How do we ensure that there is seamless interoperability amongst these two economies or two countries so that we can enable seamless transactions for after to progress? We've not been able to do that. How do we? So these are things I think there needs to be a wider plan at the African Union. The challenges and KYC issues. I mean, we cannot be in Africa, not just in a siloed individual countries, when we are talking about AFTA as well, and not be looking at some of these pertinent issues we have on the continent.
Thank you, Martin. You're big on international trade. You mentioned AFTA, and we'll get into that. You mentioned fragmentation, and I know Bankole is very particular about harmonizing the regulatory framework, within Africa. So I'm just going to go to Bankole now. Bankole, I want you to speak to that issue, fragmentation, in addition to other challenges you might have faced, in running helping the firms you've worked with, across Africa. I want you to speak to that issue. Bankole?
Yeah, thank you very much. So I think in addition to the infrastructure challenge, there's a lot of fragmentation in the payments space across the continent on Africa. One of the first challenges in that space is interoperability. A lot of our payment systems don't speak to each other. The last week, I think Martin was talking about, Nigeria and Ghana, for example, and I know that for the last 10, 12 years, there's been an initiative called the West African Monetary Zone, which has kind of driven, sister brother countries in the West African sub-region to start developing their own homegrown infrastructure and national switches. So we've seen, countries like Liberia, Gambia, Sierra Leone, all try to build national switches. The objective of the West African Monetary Zone was to integrate, all those switches with the switch in Nigeria, the switch in Ghana, so that we could process cross-border transactions almost at an instant and at an interoperable scale. What you have today is, if you want to use traditional banking methods to make a payment as a business person, I want to send money from Nigeria to Ghana. It first goes on the SWIFT network. It goes all the way to New York. Then it comes back, all the way to Ghana, So there's the time lag, costs in time. There's costs in the fees that you would pay, the banking fees that you would pay as well to do this sort of transaction. So interoperability is one problem. Another one is we have multiplicity, or let me use the word, rather we need, what we need to do is to harmonize the rules in the various countries where we operate, as business owners or as as businesses like Flutterwave, where, you know, you have an operation in Ghana, Nigeria, Kenya, etc., you know, as a business, the rules are not harmonized. In some countries, you know, you have the same objectives to collect KYCs, same objectives to, you know, do your AML CFT, but, you know, the how may differ. You know, what is required as KYC in one country, completely different from what is required as KYC in another country. Another big challenge is, you know, cross-border data flows. Some countries have these requirements that says I must onshore, which is I must warehouse and keep data of the customers or citizens of that country in that country. I cannot move that data freely across borders. It impedes the ability of companies to do, you know, payment transactions and other type of commercial transactions where I cannot, you know, process citizens' data across multiple borders. I mean, these are some of the challenges that we, you know, as businesses we face in doing business, you know, on a cross-border basis. Thank you.
Fantastic, fantastic. You mentioned, you know, the data flow and privacy, security is one of the major things we're also going to be speaking to. Elizabeth, you had something to add to that.
Thanks. I mean, I worked in politics before I moved into finance, and I left because I was so frustrated about how hard it was to work on multilateral agreements. And I think in the 25 years since I left graduate school and I wrote a thesis on the European Union, we haven't seen it succeed. The East African community is alone in really functioning same-day instant settlement between markets. We see some of that working in Southern Africa, but not at the same speed and efficiency. I think it is incredibly difficult in execution to get these multilateral organizations to not only agree to something that works on a political level, but then to actually put it into practice on an operational level. We've seen that with PAPS from Africa Exim Bank. It might work on an academic level. It's sort of working on a political level. It's not functioning at all on an execution or operational level. It's an almost impossible task. And we've only really seen globally, not to get too high level, this work with military or defense. We don't really see it work in the finance sector. What we have seen is the SWIFT, which is a private organization, dominate in a monopoly. And just to add on, not only do over 30 or 40% of flows in and out of Africa that are not going to the United States still clear through the United States. So that means that flows that are going to Europe, South America, Middle East, Asia are still routing via the United States. Not only are we giving that kind of control over information and data and decision-making power and calendar to a market that has nothing to do with these transactions, we have not created a substitute or been able to break that global monopoly. So I think it's a very big issue. And I don't know if a multilateral agreement between African markets is a pragmatic answer that operators like us can depend on. I mean, we can hope for it. We can pray. But as I love to say to my team, hope is not a strategy. So I think, you know, what we're looking at right now is potentially a private group of companies offering a solution so effective, governments can't say no. So, I mean, that's what I'm thinking of right now. And we're seeing that already with Pan-African bank groups, regional banking champions. Access Group comes to mind. Absa comes to mind. Standard, Stanbic are coming to mind. UBA, BOA. And they are partnering with multiple fintechs to create these kinds of solutions that we just can't wait around for.
Wow, it's interesting. The cost, the time. Wow. So, I mean, but from what you've said, it sounds like there's some sort of improvement that you're seeing in the space, right? Would you say that there are?
Not from any multilateral agreement. Absolutely not. I think when I started this business in 2013, we already had the EIC working pretty well. And we still don't have same-day domestic settlement between banks in the Senegalese market. It's almost difficult. It's very difficult to do a bank-to-bank transfer domestically in WIMO, which is why you have so many fintechs stepping in and so many banks partnering with fintechs ensure that there's too many operational difficulties. I think when I tell people that in WIMU and CEMAC, which are the two Francophone 10 market regions, that you don't have domestic same day delivery or even T1 sometimes, I tell them the actual execution times on the ground, they don't want to hear it. It's fingers in the ears. I think execution wise, we still struggle with some of the big telcos. Even MTN, God love them, has different opcos in each market that don't use the same IT system and still uses multiple parties. Even MasterCard and Visa use multiple fintechs to connect with different parts of their own business. So we're seeing private sector actors struggle to maintain infrastructure with the same quality control over large geographic regions. There's no way we're going to see that come from a government or a multilateral non-commercial business organization.
Yeah, okay. Ken, you want to chime into what Elizabeth is saying, right?
Yeah, and I think the unfortunate situation we find ourselves in is that there's always the good intention from a different country's perspective to try and do this differently, but it never translates into tangible action. So for instance, from an East African Payment Services perspective, that is now in place. It makes a huge difference because I'm now able to remit funds and someone in Uganda or Tanzania will receive those funds same day, and they're able to operate very well. So if that then can be extended to, for instance, the ability to move money through fintechs or MNOs and other telcos through the same region with great ease, then that becomes another area to improve the ability to make remittances that much easier. So if, for instance, find Kenya is telco-led, you find that Uganda is bank-led, there could be some differences there, but there's a possibility to harmonize certain of the things. So you find if you find like an M-Pesa, now with the relevant approvals that they have in place, they're able, one with an M-Pesa wallet is able to remit funds to someone else holding a similar M-Pesa account in Uganda or in Tanzania. So it's now possible to do some of these things. It's the ability for us to replicate this that then becomes the thing that we should be striving for the most. And I mean, if you couple that with things like sanction screening, that are done at different levels and in different ways in different jurisdictions. And you have different jurisdictions that also have their own regulations touching on these issues and will require that the screening happens in a particular way or differently, or there may be delays on how that gets done. Then it just compounds the problem. And for me, it boils down to when there are multiple points of considerations that any institution has to make in enabling a particular service, the cost of that service goes up.
True.
Definitely. True. So, and that means then some of the solutions that are available also then become costly, which then becomes another challenge. So there's opportunity to enhance, change, improve on some of these things. I mean, we say that, yes, regulation and laws are great, but if that is what would have led for M-Pesa in Kenya, we would not have M-Pesa in the fashion that it is today. Yeah, so regulation caught up to it much later. So it did not stifle innovation in a sense.
I see what you mean. You know how you said that good intention is what drives the countries to do this thing. I know that consumer protection is one of the reasons, for this regulation. We're trying to prevent fraud, unauthorized transfers. So how else would you suggest? I don't know if Kenya is bank-led in terms of your cross-border payments. You know how I think it was Elizabeth that said some other region are fintech-led. So what would you say your central banks or your central bank rather is doing to sort of adapt to the changing landscape that we see in cross-border payment to maybe minimize these challenges or align with the solutions that we're hoping would happen in the space? What would you say the central bank in your country is doing? Seeing that you even have like banking experience, core banking experience as well.
So the regulator is encouraging innovation. So you will find that there are banks that have subsidiaries or other branches or maybe subsidiaries of a parent company outside. So for instance, companies that have parent companies in one of the jurisdictions but are represented in different currencies. So Absa in Kenya, Tanzania, or Uganda. You will find that there are some of those institutions that have found ways to enable payments seamlessly, such that for a client, you moving to if you're based in Kenya and you move to Uganda, you can access the account from there as if you were in Nairobi. So some of those innovative means of making payments that much easier, or ability to just have access to your funds, is being encouraged by the regulator. So if you look at the fintech space, there's great evolution in that space from a Kenya perspective. I mean, what we call our Silicon Savannah, the level of innovation, the speed of innovation. In fact, what is happening is that the regulators are working to catch up from a guidelines, regulations, and circulars perspective to these issues. So it does encourage it. Obviously, when you submit your applications, then they have to consider all the relevant risks that any regulator would be interested in. Data privacy becomes critical. The other bit, if you have to deal through cloud technology, they want certainty around the securities and that you have in place to make that possible. They don't joke around with the issues of money laundering control and preventing the financing of terrorism. So then that becomes critical. If you're able to list down that you've considered all the relevant risks in an innovative solution that you'd make available to your clients for cross-border payment, in addition to what is already in place, including through partnerships, then the central bank is interested in listening to such conversations.
That's interesting to hear from Kenya. Lavina, what would you say? Do you think central banks are open to innovation? I mean, talking from your perspective on AI, blockchain, crypto, what would you say in terms of digital currencies? Are they receptive to such innovation? Because I think people on this call, some people might be of the opinion that they haven't been enabled to use those innovations. So what would you say to that?
Yeah, I think we've seen quite a large sort of portion of players across Africa kind of opened to experimenting with, CBDCs, and the likes of, extended either digital assets or crypto regulations. And I think, within that space, we obviously know that, for example, DRC is one of the first that were to adopt your CBDCs and, put that out, and then now we're seeing the likes of a few others, including Nigeria, Egypt, Rwanda, and Kenya kind of really focusing on that. I think South Africa is also part of that equation. So there is a shift and a move towards, yes, let's explore it. Let's investigate what is the best use case. Because, at the end of the day, I think it is a bit of a bittersweet moment for central banks. They understand that it needs to become very decentralized to some extent, with having some form of control anyway being put into place. And I just thought it's worth mentioning. We obviously have had BRICS that has happened last year as a summit. And that obviously includes, Brazil, India, China, Russia, and, other parts of Africa that have now joined. So it's actually growing in extension. And they have obviously put together a recommendation for something on a exchange level that is done via a crypto-based environment, or a blockchain-based environment, rather crypto. And that would, I think, help spur a lot more. So I think having conversations from the top down as well as from bottom up is kind of starting to happen. And I think somewhere in between that, we're going to start seeing a merge of something to push the industry forward in one direction or the other. We obviously seen some examples as well where it's gone wrong, or it hasn't been, applied really well, or executed well. But I think these are learning curves anyway. We've seen that Africa was one of the very first adopters in terms of this compared to the globe. So I think there's a long road, but having said that there's a long road, there's a lot that's actually being done on ground to kind of test and see where and what. So, for example, I know within the South African realm, there was Project Coca that kind of happened. That happened, I think, about 3 or 4 years ago, in terms of testing out a CBDC. And yeah, I mean, now it's progressed to the point of let's start building and putting regulations in place for that to actually then be adopted.
Fantastic. Elizabeth, do you have something to add?
Yeah, sorry, I don't want to be overly negative on all his questions, but I chaired the blockchain council at the World Economic Forum for 4 years and met with all these regulators when they were thinking of the CBDCs. And I think one thing is just fundamentally clear. CBDCs are counterintuitive or a counter to the goals of a central bank, which is to control the movement of their money. And so what we've had is the development of pilot projects that are sort of a couple of features of a CBDC and a couple of features of just a digital version of an account, and none are working in reality. Nobody's trading them, nobody's interacting. The eNaira is a perfect example. It's an incredibly small feature list of what you are able to do with it. It's very restricted. And especially when you have NIBS, which is the Nigerian interbank settlement, working so well 24/7, it works better than most developed markets, pretty much all developed markets. Why would you even use the CBDC? And similar to Coca, and the developers have been working on that for a while. When you have these great central bank switches, there's not a lot of features that the CBDC use case is. I think we're trying to like put a square peg in a round hole here on this. I think there are use cases for digital currencies and stablecoins. We've seen a huge growth in stablecoin sales across the continent this past couple of years. But I don't think CBDCs are anything more than a way for central banks to try to learn about the industry without really making a move towards working it. It is counterintuitive to the current values of a lot of these central banks. No judgment on that, just that's what it is, you know? So why would they adopt something that's going to have them lose control?
So what I hear you say, Elizabeth, is like going forward, you don't see that countries that are central bank fully led would transition into digital currency. You don't see that happening?
I see them maybe doing a digital form of their existing currency, but I don't see them allowing to trade freely, you know, with this. I mean, the capacity in a lot of these banks is struggling to keep up with innovation right now. We don't have simple foreign exchange regulation. We don't have e-money regulation. We don't have mobile money wallet regulation in a lot of these markets. A CBDC is 30 steps ahead, and we don't even have capacity. A lot of the capital markets, the CMAC groups and these things are not even integrated with the central bank. There's a million things to do before they launch a CBDC. And I don't see the market meeting there. You have a lot of cryptocurrency exchanges on the continent selling stable coins, and you have a lot of mobile money groups, and you have a lot of fintechs and a lot of banks. Who needs a CBDC? So really, I think the CBDC is being pushed by a lot of lobbying groups and a lot of people hoping that this is a way to entice a central bank to come towards the commercial market. But what we're just seeing is central banks saying, you know, I'll do a small pilot, but it's not really bridging the difference between the players in the ecosystem. It's great that it helps them learn a little bit more, but I think it's a distraction from the other business to be done.
Interesting. Okay, let me ask Bankole. So Bankole, from what Lavina and Elizabeth have said about, you know, cryptocurrencies, what would you say is your stance on the use of blockchain technology, cryptocurrencies for cross-border payments, you know, drawing from your own exposure, you know, on the market as well? What would you say?
So I think the technology is you know, is something that we will see a lot more use cases coming out of. The distributed ledger technology, I think it's something that, you know, has caught the attention of quite a number of central banks. Even the big card schemes now are building out payment solutions around that technology. We've got fintechs also considering. So I think that technology would you know, will continue to thrive. I think we'll find there'll be lots of use cases from, you know, securities investments to even, you know, everyday payments built around that technology. I think it's here to stay, and the technology would be very useful for, you know, commerce in future, across not just Africa, but across the globe. Listening to what Lavina is saying, I kind of agree that maybe, you know, a lot of the central banks were ahead of themselves. That probably isn't that strong driver and initiative for them to have successful, digital currencies at this time. But I think the technology on its own, they will find lots of use cases, and we will see, more development around the technology. Yeah.
Fantastic. Okay, so wow. So it sounds like it's going to be a little unregulated, or would remain in the informal sector rather than being fully regulated. Is that what I hear you say?
No, not that. I mean, if you look at Nigeria, for example, look at the recent circular from the central bank recognizing and allowing what it calls virtual asset service providers.
Yeah.
It's really language, but
Okay.
behind the technology, behind that language is the distributed finance technology. The Securities and Exchange Commission, for example, in Nigeria, had years ago, maybe about 3, 4, 5 years ago, been ready already for that technology, to be used to trade in securities. So
2016, yeah.
Yeah. So I think it's a case of, just like Ken had said about, if you look at M-Pesa as a case study, once you have a solution that meets the needs of the market and the needs of the people, regulation will always catch up. So I think that might be what you would find with this technology, particularly. You see the regulators already, having keen interests, and I think the use cases just need to show up, and then maybe the rules around that will form.
Interesting. All right, let me just take a break to remind the audience to drop their questions in the question and answer box. Now, before I leave Bankole, I'm curious to know the restriction for fintech to get into this space, like for the barriers for new fintech companies to enter into the space and offer or facilitate cross-border payment. Because, from what you all have mentioned, we moved from maybe operating fully on cash to correspondent banking relationship to SWIFT, and now we're going into technology, or the use of all of these things we've mentioned, online banking and the rest of them. So what would you say is a major barrier to entry for new fintechs right now as we speak?
So barriers are a lot. I wouldn't say there's just one. A few of us, a couple of fintechs have been lucky. We've broken our backs to scale. And I'll list a couple of them. So one of the biggest barriers you would find today is interoperability. What a lot of people don't know is that for every single successful transaction that you do on a fintech platform, there's a mix of multiple partners behind that transaction. We've had to sign multiple partnerships with banks, with acquirers, with mobile money operators, with card schemes, etc., just to make sure that, look, you make one purchase, you're able to move money from your mobile money wallet or from your card or from your bank account to one merchant, and that merchant is settled successfully, in a bank account, etc. That's a major barrier, and it's interoperability, because a lot of the payment systems in Africa are not interoperable. It's a major barrier for new entrants. Another one is infrastructure, I think, which we've already touched on. A couple of the speakers here have already touched on. We don't have developed infrastructure systems in all the countries in Africa. A couple of countries are trying, they're developing domestic switches or national switches, similar to NIBs you have in Nigeria. You have in Rwanda, they're also working on a retail payment infrastructure, in multiple countries across the continent. They're doing that. Infrastructure continues to remain a barrier. If you had a developed infrastructure, say for example, national switch, what a new person just comes to do is plug into that switch. And from that switch, I'm able to send transactions and messages to multiple players in the market. I do not have to have a single connection to every market player. And that brings me to the third barrier, which is the cost. Because when you have to speak to multiple players, transaction costs go and your switching costs go higher. That's another major barrier for fintechs that are, small, nimble, and, scrappy at times. We don't have the luxury of time or the luxury of funds to have these multiple conversations with many, many players. One other barrier would be, the regulations themselves. We don't have harmonized rules and regulations, between Nigeria and Ghana, between Nigeria and Togo, between Nigeria and Benin Republic, between Kenya, Tanzania, Uganda. You have multiple rules, different rules, which means that for a fintech, I have to spend time, employ experts, employ lawyers, and employ consultants, try and get a deep understanding of the various rules I need to deal with in these different markets. This also bloats up my cost of doing business, my cost of market entry. Then you have other rules generally around things like, data governance, which we've talked about. Fintechs might have one central platform for processing transactions, for doing KYC, for doing AML, CFT checks, for running your compliance program. And some markets might say, no, you cannot use a central platform. You cannot process customers' data or my citizens' data outside the shores of my country. If a fintech has to replicate that scale in multiple countries, it's almost impossible, and it's just going to blow up cost of doing business and even make it impossible to get in. And I think the last and final one I probably want to talk about is licensing and authorization itself. 10 years ago, 8 years ago, when a lot of fintechs like our company started, there were no requirements to get licensed in many of these markets. You go in with a bank partnership or a partnership with another player, and make yourself known to the regulators. You comply with the rules, and you're fine. Today, most markets are developing regimes that require you to apply for licenses, and these regimes are extremely strict. Some of the requirements are requirements that a traditional bank partner have been built around what's used for traditional banking systems and banking partners. Fintechs struggle to meet these requirements. On the average, in Africa, it takes up to 2 years to get a license, to get into a market. Some fintechs don't even know, 2 years is a lifetime for a fintech. Some companies don't know where they will be in 2 years. So I think these are some of the key challenges that I'll probably just want to talk about. Thank you.
So from what you just said last, right, it sounds like the traditional market is influencing the fintech market rather than it being the other way around, right?
I think it's a mix of both. So you find that, when people don't understand what you do or how you do, they apply what they know. So for some policymakers and regulators, as far as they're concerned, you touch funds, you provide services, which, hitherto your coming to the fore was done by traditional banks. So they apply the rules they had applied to traditional banking to you. And on the flip side, they see what you're doing, they see how you're doing well and how easy things are. And then they start to reduce the rules and the barriers, and allow more innovation as well. So it's both sides, rubbing off on each other.
Wow, interesting. Elizabeth, you want to chime in?
Yes, we cannot ignore the elephant in the room here. Flutterwave, with all respect, just put the former central bank deputy governor on their board. So we entered the market, and we waited almost 6 years for a license, and this has nothing to do with ability to comply with regulations. I've had a license in the FCA, in the Bank of Spain, in the Bank of Uganda, partnerships with licensed banks across the continent. I have audits, internal audits, Big Four companies, etc. I'm in a situation right now when a non-Nigerian, another regulator, is telling me that they can't see my high school transcript clearly. I'm a 42-year-old female, and I am, being in a roundabout thing over my 7th grade math score with the ink being slightly this has nothing to do with, are you compliant? I think a lot of this is still quite personal. And hey, that happens in America, that happens in Europe, definitely happens in Asia and South America. It's just the way the world works. I'm not complaining, but it is the truth, and let's just say it, that there is a sense of some deserve to go first, and this one will be prioritized over another. So it's very hard for fintechs that don't have a deep family or relational network in these markets to enter the market. And I saw it. I was living 8 years in Kenya, and we had the head of Google Kenya on our board when we got into a big snafu with the Central Bank of Kenya. And, you know, when we moved into Nigeria, it happened. In Ghana, it happened. In Senegal, it happened. Every single market I've entered, it's happened. I have 250 employees, and 220 are African in our African offices. And we felt the need to open up deep local subsidiaries where we hire locally, we pay taxes locally, we work very locally. It is incredibly hard for a fintech to build that kind of distributed infrastructure and manage it across the continent. That's why we see a lot of fintechs that are very strong in one market, where they have family or school or relational or ex-employee relationships. It's very hard to enter these markets. I think that it's much easier to enter Southeast Asian markets. We see a lot of global companies go into Southeast Asia and kind of go market by market. You see some of that happening in Latin America. It's almost impossible to do in Africa. It's taken me almost a decade and a half to get where I've been, and we're still waiting for licenses. So I don't think it's a meritocracy yet. I think you have to have everything absolutely perfect, dotted I's and crossed T's, and then on top, wait and be patient. So I think the winner is the one who waits the longest and is the most patient and invests in the region. I don't think regulators and governments want to see people come in and out. They don't want to see foreign-owned companies come in and do something quickly. They want to see people that are here for the long run.
Interesting. Wow. I know that we have a mix of audience here. We have professionals who are in compliance, we have risk managers, we have just individuals who want to know, how do I get my payment done? You know, I don't know the back end of what's happening, but it's interesting to hear all of this, why it's expensive, why it takes time. And I want to loop in Kwame to speak on the after, because really,
Sorry,
just
I think Ken wanted to sort of add something to the conversation.
okay.
Yeah, and I'll be quick about it. So
Right.
all those are challenges that, especially from a fintech perspective, that are faced. And it is informed by a number of things as well. The economic and political cycle, as we understand it in Africa, also plays a huge role in what happens in those spaces. So if, for instance, the foreign currency is strengthening against the local currency, you'll find the regulator will have a keen interest in that. Now, as the regulator, they'll be keen to know, if I permit this fintech to enable the easy flow of funds without perhaps settling through a financial institution or having some level of control that I would have sight of what is coming in, to what extent does this impact the foreign currency transactions, the foreign currency trade, the foreign currency exchange? So you will find that there will be all those reasons, and that will be unique to an African setup, from a financial sector stability, fiscal issues, and also just the political interest at any one time. So you'll find those who are very keen on innovation, and you'll also find those who are of the view that perhaps this innovation is ahead of its time, we're not ready for it. So it's a mixed bag of issues. You'll have mixed success from an approval that may be considered within a short period of time, to others that will be subjected to rigors that even at a financial sector we have not experienced. So
Interesting.
yeah, it's a mixed bag.
What I hear you say, that fintech needs to prove that they're worth their salt. But from what Elizabeth said, they've been trying to do that, but there's just some sort of bias against, entry for fintech into the space. So, I mean, did I get you right, or?
No. There's no bias against, because as has been shared earlier, most jurisdictions in Africa where the fintechs got in early enough were able to develop certain products and actually facilitate transactions. It's only now that you have jurisdictions that are now introducing regulations that, so firstly register, get fit and proper for your senior executives, and also for the organizations that are involved in what it is that you're doing. So you find that there was that space that was permitted, but as things change, be it an economic cycle, be it political cycle, or should there be something that happens that blows up in one country touching on a fintech, then you find the regulators begin to have a keen interest in that space. So it's a mixed bag. It's a mixed bag. There are those that have been incredibly successful and are doing well. It's just that certain of the requirement, the standard that is applied to certain fintechs more generally is apply the same measures similar to those of a financial institution, traditional financial institution. That's where the challenge arises.
Wow.
And I'll probably add to that just a little bit. And I'll also say, you know, I think we often make the comparison of international progress and Africa progress on the same sort of benchmark. And we really can't, because, you know, each of them have different levels of either infrastructure, maturity, regulations, you know. So as much as a fintech within Africa may want certain things, I think it's also very much benchmarked against, you know, what happens internationally cannot necessarily just be an expectation here. And yeah, you kind of just need to wait out a bit.
Yeah. Let me get to Kwame. Kwame, in relation to AFTA, you know, all things we've been talking about, businesses really just want to participate in global trade. They want to expand. They want to sort out their supply chain, their remittances. What would you say the agreement would do for the current regulatory challenges we have for inter-African payments? Kwame, does anyone want to speak to AFTA? Like, how do you think it would enhance trade among African countries? And how do you think it will support, or, I mean, the impact on the current frameworks we have, whether or not it will hinder or it will enhance what we currently have? Bankole, is this something you would want to speak to?
So I'm quite excited at, you know, the spirit of the AFTA digital protocols that were recently agreed in February, I think at the AU Heads of States meeting in February, just last month. Because I think the biggest challenges we face as business on the continent is, you know, having that lack of interoperability, not having harmonized rules, and, you know, not even recognizing the kind of technologies and, you know, how we operate our services. So I'm excited because, you know, this protocol kind of seeks to address what we do, which is really digital trade. And from, you know, very simple things like making sure that, you know, across the African continent, the countries that have signed up to AFTA all, you know, have a harmonized regulatory regime, making sure that, you know, ease of entry, information is available, things like, you know, cross-border data flows, consumer protection online, cyber security standards. You know, it even recognizes the use of new technologies like AI. So for me, it's exciting that, you know, I think we're seeing the right steps. We're seeing from a perspective of policymakers that, you know, people are thinking about having common principles and doing the right things. So I'm excited about that development, and I'm really looking forward to how, you know, it will be implemented and how, you know, various signatories and member countries of the AfCFTA treaty are held accountable. Because a lot of what we've been talking about today, the challenges we've all talked about, this protocol, you know, the AfCFTA digital protocol seeks to address that. So, you know, really excited at that development and looking forward to, you know, how we all hold policymakers and member states accountable to it. Thank you.
Yeah, fantastic. I'm glad that you mentioned about the you know, data flows once again. And I saw Lavina, you know, Lavina was nodding. It seems like it's touching on your area on AI. So Lavina, I'll just get to you on data protection, you know, regulations around that. How do you see, with the increase in digitization of financial services, how do you see that regulatory bodies or, you know, agreements such as this are addressing concerns related to data protection and privacy? Yeah, because if I don't ask this, I'm sure my privacy people would come for me. Yeah.
Yeah, privacy is one of the highest spoken of you know, areas, and I think it cuts across all different sectors, right? So, obviously when we have to talk about the AFCTA, it's, its potential is just like phenomenal, because what it means is that Africa can rely on Africa. The supply chain can actually then grow and feed and support each other in a very coherent manner, right? Both from a supply chain, from a production, from payment, from, just having like a really cool to have, right? But I think, when we have to talk about data protection, if we have to give some stats around that, we kind of went from pre-COVID of only 6 countries having some form of data protection in place to now we probably have about 37 countries in total that have a data protection in place. So in a space of like 4 years or 3 years, we've managed to see regulation across the continent really catch up in a very fast manner, more so than we've seen with regard to other aspects. So I think, a fundamental sort of area is privacy and is protection and is security for any consumer. So whenever you trade, whether it's electronically, whether it's digitally, whether it's in person, or whichever manner you decide to choose, you should still have that same form of rights that then protect you. Okay, and I think those are the kind of things that are starting to blend into these digital policies or these data protection policies that are starting to exist. Now, we've obviously seen also, forms of like IP laws that are also being, amended to kind of then protect, whether it's the startups that are then, putting out these particular solutions. We've seen bodies also from a consumer perspective try and be there to support them, right? So whether it's unjust, whether it's gig workers that are being, taken advantage of, within that environment, or whether it is, something going wrong, like a credit, for example, where, someone applies for credit, they get approved, but then their entire phone gets locked because they can't make a payment. So like all of those type of things are actually being addressed and are starting to be taken seriously. So overall, I think it's really good to see that, from a regulatory standpoint, that interflow is actually coming together. And I think if the vision of the AFCTA can actually be then executed together with the AU Vision, 2063, then I think we're probably on a good trajectory.
Awesome. Elizabeth, I want to ask you a question on, just this data protection and privacy. I know that your company also adheres to like ISO standards for security. So what would you say in terms of digital identity verification for enhancing security? You know how we said that consumer protection is one of the reasons why there's regulation in this field, right? So how would you say that the new regulations have affected maybe your operations or enhance your operations for the protection of consumers regards to their identity?
So thanks for mentioning that. We were really actually quite proud to be the first fintech in Africa to get the ISO 27001-2022 compliance just last year. And I think one Egyptian bank has it as well. We have a very serious information security team, and we have our very strong engineering department and consider ourselves to put engineering first in everything we do. So we take data and privacy quite seriously. I would say that, it started from our beginnings when we were working with Google Kenya at the outset. They were very concerned with that, and their concerns when we started were always very data privacy led. So it's interesting that in Kenya, our local partner at the time was giving us a hint of what was going to happen for even European regulation. So in this way, it's kind of like Africa influenced what later on happened in our European subsidiary. And then, of course, when we became licensed in Spain, when we acquired a company in Spain in 2017, we had very, very serious and heavy data privacy and information security regulation from Europe. So we're an African fintech that then, launched Europe. And so we operate our operations across the continent and even up into Europe, the UK, and the Middle East with the same infrastructure, the same onboarding. So even if we're in Togo or we're in Botswana, or we're in Belgium, we have the exact same data security. We go to the highest level. We just found that to be the case. And as the markets increase, and similar to what was said before, we hope that impresses regulators as we, you know, beg them to see us and look for a seat at the table. I think in this day and age, you can't ever take it too seriously. We had a round last year, like everybody else, of AI generated phishing where we had voices of senior directors replicated and really tested our internal compliance policies, where we say that people are always the weakest link as opposed to our systems. But I think, you know, as long as you keep that at the forefront and you invest in a team that is pushing the envelope forward, I think you can't go wrong.
Yeah, thank you, Elizabeth. What I hear is, you know, while there are these challenges, once you have the structures, you keep moving and building and improving, and maybe enhancing your compliance program or framework to address the issues. I want to ask Ken. Ken, from a consumer protection angle, you know, Bankole has spoken about data flows, we've spoken about licensing, Elizabeth has spoken about data protection. From your own angle, from like the banking aspect, well, how would you say regulations around digital identity, data protection, privacy has impacted fighting terrorism, financial terrorism, or yes, fraud? How would you say it addresses fraud from the banking aspect of things? Or what measures would you say banks are now putting in place to address data protection issues?
So a number of measures have been put in place, and to the points that have been shared earlier, we have to evolve as we carry on. So I usually give the statement that when I wake up in the morning to do my job, there are people out there who wake up in the morning to find ways to hit banks, steal from clients, and find innovative ways to do that. So with each time that there's, you know, an exposure, an institution and also then the cybersecurity service providers will always try to find ways, innovative ways to try and address that. So for instance, issues to do with biometrics. Initially, I mean, if I look at M-Pesa and how it started, simple use of USSD or your smartphone, not much security was in place at that time. But with the kind of frauds that were perpetrated either through mobile banking apps really associated with banks or directly from your M-Pesa system. So there's been a need to put in place biometrics capabilities to allow that to happen. The other is things like two-factor authentication. So that also becomes quite critical. If I'm able to access the first stage, for me to conclude the second stage, some ability to authenticate through another gadget or through another, through some messaging solution, be it email or text message, then that has also come into play. We've also had to innovate because of what we call social engineering that has happened a great deal, especially when we look at the mobile banking applications and linkage to the mobile network operators. We've had to also engage in what we call device binding, because then that stops someone from using my credentials on another device that has not been registered to use that particular app. So that has also helped to put in place certain security measures. But you also find mobile network operators providing you with the ability to use your voice or other features to be able to conclude certain transactions. But when Elizabeth speaks about AI-generated voice, then you begin to ask yourself, what next?
Yeah, I know.
Yeah, what next? But the reality is that we are constantly evolving and finding new ways to try and curb the issues to do with fraud that are associated with payment solutions. It's just that, yeah, we have to be very careful and run ahead of this where possible, and also just to try and catch up and as speedily as we can when that happens.
Kwame, thank you, Ken. Kwame, are you back? We'd like to get your thoughts on some of the things we've spoken about, if you're able to speak to us. Okay, I guess not. Lavina, I'm just going to come to you. You know, we've spoken about use of voice recognition, and I know you were big on AI, you're the AI mom. what trends do you see? There's the rise of deep fakes and the likes. We're also trying to protect people. We're trying to protect organizations. We're trying to protect, transfer of data across different countries. What trends do you see coming to fore in, that would really affect cross-border payment in terms of AI and this sector we're speaking on? What do you see coming on board soon?
Yeah, thanks for that question. So, just to address the whole deep fake sort of scenario that we talk about, which is, voice replication as one part of deep fake. Another could be a picture, another could be, so I think with that, the AU commissioner himself has been subjective to being part of deep fake. We've seen journalists being part of it. We've seen ordinary citizens. So, it tells us that just by that mere stance, that nobody's excluded. Yeah. So given the fact that nobody is excluded from this and everybody is a potential, I think it really actually then starts to boil down into, company values or governmental values or individual values to kind of then really uptake in terms of how they want to protect themselves. So, do I, for example, me as Lavina, as a digital citizen, do I become like super cautious about the information that I share and my footprint of information that I leave out there? Do I only connect to the internet when I actually need it? Do I delete my information? To what degree do I have visibility of where I am and where my presence is across that? So there are those kind of questions that I would ask from a citizen perspective. And given the fact that we have a very young continent, in terms of age, I think we're going to start seeing a larger adoption of all of these technologies. Like AI and blockchain, AR, VR, that kind of really come into the fintech space, where, it's almost going to be, they're going to move from a very traditional or non-banked environment into one that is super futuristic. So, it's like that whole scenario that was mentioned earlier with M-Pesa, where it was nothing for a long time, and then, mobile money came about. So I think we're going to start to see, a large sort of gap that gets filled. I think also, from an AI perspective, the technology is actually maturing to some level. I think the accessibility of it since last year has made everyone kind of really get a good idea and a good feel of what it actually can and can't do. But I think we're still a long way off, so protection and cyber security is definitely on the rise. And I think that's going to be a huge focus. So AI can play quite a large part in, 24/7 observation and monitoring of your network, monitoring of, transactions, those sort of things is something you'll see. I think AI plays a huge part when it comes to chatbots. That is another big part in fintech, where now all of a sudden you have, just say, for example, I speak Swahili, as my mother tongue, or I just prefer to, communicate in that particular language. Chatbots now will be able to have that ability to be able to speak in any language or converse in any language. And I think that's going to be really huge in the fintech space, because it's really then starting to, include everyone in that spectrum. So it makes it a lot more tangible and feasible. And I think we're also going to start seeing a lot more interoperability, which is something that everybody's kind of touched on, come through that AI can play a part.
Thank you, Lavina. It's interesting you mentioned AI bots for, languages. What I find is, the languages that are prevalent are, maybe English, Chinese, the ones that people deem the market languages. We hardly find African languages being, learned by these AI systems for the African market. So it's been great to actually see that happen, in the coming years, months. I just wanted to mention that. I feel
it's already out there actually. So there's a few startups that have already been working on solving this particular problem. So there's a few in Tanzania, there's a few in South Africa that really take NLP, and they've done a really good job in terms of, translating English to Swahili or Swahili back to English, whatever the case may be. So I think it's definitely going to start opening up a lot more doors. People just obviously now need to know that it is there, it is available, and they can actually start including these bots into their environments.
Okay, that's great. Okay, I think we're going to wrap up very shortly, but before we do that, let me just take a few questions from the question box. Bankole, I have a question for you. I think it would be apt to ask you this. You had mentioned that payment is partnerships, and I very much agree, and I think everyone on this call would agree how that while we're trying to make payments on the back end, there's so many things going on. So there's a question here that says, what part of the struggle getting regulations off the ground is lack of long-term funding to policy advocacy groups? Which such organization have helped you move the dial, and how much of this advocacy boarding have you shouldered as a private sector? So I think maybe partnerships in terms of policy dialogues to make sure that we're going to where we as a group want to go to.
Yeah, thank you for the question. So at Flutterwave, we've led that space in terms of thought leadership. And there are many organizations, some of them very notable ones. For example, the US Africa Business Forum, we're vice chair of the board. We've led a lot of advocacy campaigns. Corporate Council on Africa, we're also vice chairman of the board. Locally, in many of the countries in Nigeria, where on the American Business Council, I used to lead the digital work stream for years on that council. In Ghana, we're in AmCham. Kenya, we're in AmCham. We're in Rwanda, we're in Fintech Association. In Kenya as well, I think we're also vice chair of the Fintech Association. So, and a lot of this isn't, I wouldn't say it's really about the financial costs. It's the man hours, the costs, having dedicated experts, people have their day jobs in the company, pulling them out to come and sit, and work on behalf of the industry. These are commitments that we do. These are lots of, if I use the language you asked, the burden we carry on our shoulder as a company at Flutterwave. So many different, last year we were drafted into the National Blockchain Committee by the Minister of Communications in Nigeria. We did a lot of work on that. We do a lot of work as industry that we don't maybe celebrate, we don't make so much noise about, and we see a lot of the results in some of the new policies you see coming out. There's a lot of backroom work that has gone in, being direct and indirect through industry bodies, through associations. New one that we're tackling now in, across multiple markets is building capacity around, cybercrime and other related incidences and activities as well. I hope I've been able to answer that question. Thank you.
I think it answers the question, and I agree with you. I think everyone, even on this call, like the speakers also, by being here, you're also moving the needle, trying to educate people and, share your perspective, how you've navigated the challenges you face. So, we appreciate that very much. Another question here, Elizabeth, I think this would go to you. So the question is, the major challenge we're facing now is marketing our products to other African countries. This happens as a result of trust issues. How can we earn their trust and be partners in the near future? So now, whose trust?
Maybe the client's trust. Let's speak on that. So it really depends if you're a retail or B2B business. We have found in the B2B space that small targeted events where we are present in market, even before we open an office in that market, really work. So you have to invest the time into meeting the key decision makers. Like what was just said from Bankole, we used to do a lot of lobbying groups, write white paper. I actually wrote a white paper for PEP, things like that with the different lobbying groups as well. I think time in market is still important, even in a digital age. We do a lot on LinkedIn as well. I think it depends on what your market segment is. If it's Facebook, if it's social media, if it's LinkedIn, if it's in-person events, just test, measure, and change your decision based on that. I think no market is the same and no demographic is the same, but I think you always need a data-led approach. What is working? How can you tell if it's working? And move forward. A CEO from Travel Start, if you guys know them, they're a really big travel company across the continent. About a decade ago, he told me he hates to do physical advertising because he can't measure it precisely. So he'll never do a billboard, which is very common in the travel industry. So he was kind of going against that. He only does marketing that he can measure. I think we've taken a middle approach. We also have a lot of languages. So you need locals who understand the language, who understand the nuances, and can see how that goes. So hope that helps.
Yeah, I believe it does. I believe it does. Okay, so there's another question here, and I think Lavina will be able to speak to this because she works with the African Union. So it says, in Africa, what do you suggest that the African Union can do to bridge the gaps in infrastructural lapses that occur across the region? I mean,
yeah, so infrastructure gaps are quite interesting. It's not necessarily a play from an AU level. It's more on the application side. Policy and regulation is where we sort of get involved, and governance. But I think, an aspect of that could be, around ensuring that infrastructure is actually being, implemented across the continent at the speed that is required to meet, for example, the Agenda 2063. Making sure that, that they have an eye on what's actually happening from an infrastructure perspective, maybe even perhaps getting some investments. I know there was some talk on an AU level at some point around having a fund that can actually drive a lot of that. There was also talk of having a fund of funds, which would be, put into the actual industry of fintechs as well. So yeah, I guess there's a couple of things, but it's not on the sort of top priority, just because the mandate of AU has always been just around, either your rights, human rights, it's been around regulation, it's been around governance. Not necessarily, infrastructure as a whole. But I think we can definitely play a hand in terms of bringing together the right kind of partners to ensure that actually happens.
Okay. Thank you so much, Lavina. Ken, do you have maybe an input to all the questions that's been asked? I want to know. Ken?
No, nothing to add at this point on some of those that have been, thank
you. So Ken, I also wanted to ask you about, we've spoken about businesses, right? How to enhance global trade, supply chain issues, market expansion. I know that for the banking sector, individuals are always curious on how they can access, they want to pay for their school fees in different other countries outside maybe Kenya, right? They want to travel, they want to shop, but sometimes they're met with roadblocks. What do you foresee in the nearest future would help them achieve, like the individual cross-border payments we want to make, or even remitting to family members? What do you think the trends from the banking sector would be in the few months to come?
There are some innovative solutions that are already in place. So, for instance, simple things like ability to move funds through credit cards. We also have, so for instance, if I've got a child in the United States, I can give them a credit card, which I can be loading with funds from this end. And my ability to convert into the currency that is then usable for them on that side then becomes quite easy. So for instance, you will find the institutions that have got multiple currency credit cards. All you need to do is load it and the person on the other side can use it. Or if I need to move about, I don't need to carry hard cash. Once I've managed to convert the cash and credited the credit card with the particular amount that I need in that particular foreign currency or hard cash, then I can use that card on the other side quite easily. We're also seeing a lot of, and especially when you look at the region where we are in, where there's a lot of flow of funds coming this way from the diaspora, people either looking to invest back home or support to family or savings on this other end. There are very many innovative solutions that have come about. I mean, there are fintechs that are making this very easily possible, whereby I can easily use my credit card, move that into a wallet, a digital wallet, and that money can flow through into someone who holds a Safaricom or an M-Pesa account on this end. So there are some of these innovative solutions that are in place. I guess the trick is in that innovation, how do we minimize on the different handovers or touch points that have required the use of multiple service providers in different areas? And how do we also find common solutions that can perhaps even be regionalized, that takes away certain of the handicaps, if it is, for instance, from a money laundering control perspective? What kind of agreements can be put in place where there's great and confident reliance that can be put into what may have been carried out? Let's say funds are moving from the UK and flowing into Kenya, that we can place reliance in the regulatory landscape that is there from a UK perspective, such that when the funds are received here, then they are not subjected to additional checks, and they will easily credit Ken's account. Because guess what? If Ken is already an account holder through Safaricom, or is through their wallet at Safaricom, or a bank account through Absa, then we've already subjected them to the relevant due diligence measures. So my view is that there already are solutions that are in place. We just need to make them easy, efficient, cost-effective, and take away some of the red tape and the handovers in the chain. I mean, I sometimes look at the maps that are drawn out around how transactions flow in these spaces, and you think to yourself, man, this looks like a physics lesson because of just the number of boxes and lines that are drawn up. I think the efficiency aspect of it is what becomes very critical.
I hear you say reducing the duplicity of players. I also hear you say something around that, so that it's more seamless, and by being seamless, it's more cost efficient to make payments. Very well noted. I think we're coming to the end of the session, and it's been a great one. Before we wrap up, I'll just look through the chat and see if there's any other questions. Oh, I see. There's one here about employers facing challenges in hiring expatriates due to difficulty in making payments to expatriates. I think this touches on currency purchases or exchanges, conversions. So let's see. Are there digital or fintech platforms that make such payments seamless? Elizabeth, is that something you want to answer? So the question says, employers are facing challenges in relation to hiring and making payments to expatriates who insist on being paid in dollars, despite the struggle with cross-border payments. So are there digital or fintech platforms that offer such services to employers for payroll or remittances for their employees?
Yeah. So first of all, I'm a huge proponent of not dollarizing your invoices. I'm, as you might have noticed from this webinar, I'm very passionate about this concept. And I think we should be trading in African currencies if we're using and moving goods in African currencies. It's really important for autonomy, for monetary policy sovereignty. It's really important for growth in this region, and it's really important for, you know, deconstructing some of the monopolies that have been built in global financial infrastructure. So I'm always a proponent to look to put your invoices in local African currencies, and to getting rid of the idea that African currencies are exotic, which is how they're categorized at the top banks around the world. They're called exotic currencies, which is still crazy. So I think, you know, number one, that's what we can do. We can talk to our supply chain about doing that. There's a lot of fintechs working on this. We work with a lot of global companies on helping them with their foreign exchange and treasury solutions, mainly from the B2B space. We look to work with local banks to find solutions, introduce companies to each other, introduce them to banks, and try to reduce friction in this space. I think there's still not a great P2P option that's low cost. We're hoping to get there by tackling the middle market. And I think it really varies market by market. There are some serious exchange controls in many markets in Africa where you're not allowed to offshore funds and you're not allowed to buy dollars outside of the central bank window. So you have to be very careful where you're operating. I think in some markets that we're really excited about, we're seeing some African pairs. So we're trading between Nigeria and Ghana, between Nigeria and South Africa, between ZAF and ZOF. So those Pan-African pairs are now becoming something that a lot of fintechs, especially ones like us who are very passionate about using African currencies, are working on.
Wow. I think even for Nigeria, we have something like non-dollarization policy. So I hear what you're saying, how that invoices should maybe be in the local currency. We have a lot of questions now in the chat. That's quite strange, but I doubt we'll be able to take them. What I would suggest is that the organizers maybe send them to the panelists. And, you know, if you would indulge us, answer them, and maybe we can publish it someplace for people to refer to, because we don't have that much time to take more questions. So I'll just wrap up and summarize what we've talked about. We started off talking about the regulatory framework, and you know, seeing it from different aspects within Africa, from an East African perspective, West African and South African perspective. And we've talked about the challenges, and one of the major things I heard the speakers mention was interoperability, data flows, how licensing and authorization is also an issue, the issue of meritocracy as well, and fragmentation of regulations. You know, we've talked on all of that. And we've also talked about the solutions in more partnerships, making the rules and regulations harmonized, reducing the costs of the players in the transfer so that cost is reduced and it's seamless. We've talked about international trade, privacy, security, optimizing relationships and making payments. We've talked about a number of things, and we just really hope that the audience have been able to gain more insight on why, you know, it's been difficult for them to maybe make their payments and what the fintech or other organizations are doing. Obviously, they're doing their best, and it's just regulatory challenges that makes it slower, you know, not able to achieve as much as we want to. So this conversation definitely is a precursor, because this topic is really wide, and there'll be more conversation on this in the months to come. Prembly does a quarterly session like this, so I reckon that in the next quarter there'll be probably something similar, but I'll leave that to Prembly to speak about. I just want to thank the panel for being a very wonderful panel. I have gained from you guys. I have listened intently, and I understand that you guys are doing great work. I congratulate you on the strides your companies are making, your individual strides as well. You know, so well done to you guys, and thank you for honoring our invitation to be here. And to the audience as well, thank you for having us and listening and dropping your questions and making the session thought-provoking for every one of us here. I guess that brings us to the end. Maybe there'll be communication about more future webinars that they will hold in the next quarter. And I know they also wanted to talk about the next steps from this conversation, maybe something related to policy, how to move the needle further in different countries that we're operating in. But I don't happen to see anyone on the call right now. I'll ask the guest, is there any other thing you want, maybe something like you believe the audience should know? Elizabeth, anything that we didn't touch on that you want the audience to be aware of?
I think I spoke quite a bit.
And it's Thursday afternoon.
I think mine is a suggestion, actually, because I think I saw one of the questions from the professor, which is, I think as consumers and users of service, we probably all need to get involved in these policy conversations and discussions. You know, there are advocacy groups, pressure groups, consumer groups that, you know, people could sign up to and join the conversations. Don't leave the battle and the fight alone for the banks, the fintechs, and the players. You know, we serve the consumers, so if the consumers are keen, they should also join us and get involved. That would just be my thoughts. Thank you.
All right. Okay. So I see Prembly is here now, so maybe Prembly can take over from here. Thank you very much, Bankole, for that one. I know that, you know, we've been talking about the business angle of things all along, and we've just chipped in on the individual perspective. So it's great that we also participate in this, even being aware, right? Even being aware of things that happen at the back end is very important. So thank you for mentioning. All right, I think my job is done. Prembly? Thank you, Lavina. I saw that. Thank you very much. Oh, I don't think Prembly is still back on. Okay. It's been a wonderful afternoon. I wish you guys a beautiful evening. There'll be further communication from the team after this session, and all the best to you guys in your companies, in your personal pursuits. And well done for bearing with the stress and struggles, in this industry and making it possible for consumers like us to benefit from your services. Thank you so, so much. It's been great having you guys. Bye, guys.
Thank you.
Thank you. Thank
All
you.
right, bye-bye. Have a good.
You too. Thank you, Bankole. Thank you, Lavina. Thank you, audience, for being a good sport as well.